Hi, today is the 7th of October and let's start a new video. Now this time I'm going to show you a chart and have a look at this chart where you can see that this is going down and then there is a reversal here. This is a weekly chart. I'm not telling you right now what it is. But this is a weekly chart and you can see nice reversal to the upside. This pivot has been taken out, and if you look at the daily chart, this is the daily chart. Are you likely to be bullish on this chart? Are you likely to go out and just buy this chart, this script, whatever it is? And I'm sure the majority of you, my friends, would want to buy this breakout. Just look at the bars. Now, let me tell you what this chart is. This chart is of Nifty inverted. We have inverted the chart so that the bias which we have inside us, that we are always bullish and we always think things are going to go up, can be examined. So if you did not know what this chart was, you would be tempted to say that this is a nice trend change, is likely to move in this direction only, and if this high is taken out, we are going to pretty much higher levels. Only, my friends, this is the reverse Nifty chart, and once we look at it the right way around and see what happens here now. So this is the Nifty. So this is the weekly Nifty, right side up, and if you go through all my previous video analysis, all the targets which I had forecasted have been met, and met in very quick time. We were bearish the Nifty at 11,400 and went on increasing our bearish positions with almost a medium term target at 10,000, and that is on the verge of being attained. So now what? I have been getting a lot of questions from my subscribers and other friends. Vijay asked me today that what is your idea on the market? Where do you think it will take support? Where will the valuations outweigh the prices? And so on. All these questions are commonly asked. So we'll try to answer them again through this analysis. But first, let me point out something which is very glaring. The first thing is that look at the momentum of the fall right now. And what we have done here is we have measured the slope of the downtrend of this move, which is minus 294. Now look at the slope of previous downtrends or previous corrections in the Nifty. You will see they are much shallower, minus 140 here, minus 38 here, and then minus 28 here. And then let's look at this area of 2008, right? So the 2008 area started off with a sharp decline in January 2008 with a slope of minus 244, and the overall decline of the whole decline was minus 96 till the 2009 low. So now compare this readings of minus 244 to start the decline to a reading of minus 294 at the current time. So even though you may not think that this is as bad as 2008, now there's a lot of questions I got asked in my various groups and messages. Is it going to be 2008? Now look at this. The initial slope was 244 minus in 2008, and now we have got a slope of minus 294. So the evidence is there, friends, that this looks to be worse than 2008. Now what? What else can we see? Now look at the monthly chart. Monthly chart, we can count clearly 1, 2, 3, 4 and 5 waves up and done. So in normal parlance, most people would look at supports and ask where is the support, where can it bounce up from, and so on. So if you do it that way, you will see that you have a support here, you have a support here, you have a support here, and all the time analysts will come on television and on other forums and tell you that okay, buy here and buy here, and if you fail here, you buy here. But the problem is that where is the roadmap? What is going to happen? So like my friend today was asking, where do you think you will get the support, or where the valuation will kind of outweigh the prices? For that, we need to look at the Elliott wave model. The Elliott wave model tells us, getting back to the monthly chart, tells us that whenever a 5-wave move is up and done, we will get a 3-wave decline, which should ideally come into the region of the end of the previous 4th wave. So the previous 4th wave here, folks, was from here to here. So this is the area of the previous 4th wave price action. So ideally, if we are correct in our count, Nifty should come somewhere between 7,000 to 9,000 and bottom out in the months to come. It's not going to happen tomorrow. Now, this hypothesis needs to be tested at every step of the decline. But going back that slope analysis and going by the Elliott wave analysis, I do not think that we have seen the end of the decline. I do not think that we have even seen the midpoint of the decline. So we still continue to look down, and we are bearish with a potential target between 7,000 to 9,000. Ideally, it should be 7,000. Now, I know that's very scary, and a lot of you would throw it out of the window right away. But we have to keep it in the back of our mind, because look what happened in 2008. Look here. When this high became in 6,000, it went all the way to 2,000. Nobody would have considered it when we had the first or 2 bars down. So folks, anything can happen in this market. I may be wrong and we can just go up after some more fall. That's possible. But this is what the Elliott wave structure looks like, and secondly, what the slope analysis and the momentum looks like, right? But definitely the first port of call is 9937, which is this low here, which is the 4th wave of this decline, this uptrend. So this would be the first target, and we need to observe very closely what happens when that level is reached. Now I'll continue this discussion in the second part of this video so as to keep the length of the video within manageable limits. So stay tuned for the second video, which is coming up right away.